Hi, my name is Laura, and I'm here to guide you through the Smart Youth Finance webinar. This is a webinar specially designed for teens, young adults, and their parents. And this is part 4 of the 4-part webinar. All of these sessions of the Smart Youth Finance webinar deal with a different tool for your financial independence. Session 1 dealt with managing money. Session 2, preparing for future bills. Session 3, opening bank accounts. And this session deals with establishing credit and using credit wisely. I want to direct your attention to our website, which is www.ibmsecu.org, where you have lots of learning resources available to you, such as webinars, self-directed educational modules, and podcasts. As I mentioned, this session is about establishing credit. And what is credit? It's your reputation, or it's your reliability as a borrower. It tells others just how likely you are to repay your loans in the future based upon your actions in the past related to your loans, like how often you're going to need to borrow and how timely your repayment will be. So credit is made up from information about your borrowing history. And most of the information comes from your credit reports. We'll talk about your credit reports in just a minute. Most people start establishing credit with a credit card, so I want to talk about credit cards. A lot of adults, they get into problems because they've spent too much money on their credit cards. It's important to use credit cards correctly. If they're used incorrectly or too often and spend too much money on them, it can cause you to lose a lot of money and cause you a lot of worry, all because of finance charges. Now, don't get me wrong. There are benefits to using credit cards. The biggest benefit is you don't have to carry a large amount of cash on you. Credit cards do allow you to pay for items. Credit cards have spending limits on them. Those are called credit limits. And when you're using a credit card, you are borrowing money from that credit card issuer. Yep, it's a short-term loan with the promise to repay the amount when the monthly statement arrives. Now, you can either pay in full or decide to make a smaller payment or a minimum payment. It's not free money when you use a credit card. So what happens when you decide to make a minimum payment on your credit card? What happens to the rest of the balance? Well, the remaining balance on your credit card will revolve, meaning it will move to the next month's bill with interest added. That interest is called finance charges. So this whole cycle continues until you finally pay off your credit card. Now, it can be really expensive to carry a credit card balance and only make minimum payments. I want to give you an example of just how expensive it can be. My example includes a credit card with a balance of $2,000 on it, and the interest rate is 19% on this credit card. It's average. And our example includes a minimum payment amount of 2% of the balance. So if you have a $2,000 balance with a 19% interest rate and you make only the minimum payment of 2%, it will take you 36 years to pay off this credit card. And over this 36 years, you are going to pay almost $6,200 in finance charges. Can you see how expensive it is to carry balances and only pay minimum payments? As you get older, you're going to start getting credit card offers in the mail or maybe in stores. So it's important for you to know what to look for in a credit card. First thing, you need to look for a credit card with a low APR. APR stands for annual percentage rate, which is another word for the interest rate, also known as the finance charge. Obviously, the lower the better. You also need to look for a long grace period. What's a grace period? The grace period is the difference in time between when the statement prints and when your payment is due. And the concept is, if you make a full payment to pay off the entire balance of your purchases before the due date, then you'll see no finance charges on the next statement. Next thing I want to talk about is fees. I first want to tell you about the types of transactions that you can do with a credit card. There's two common types of transactions. One is called a purchase transaction. This is when you go into a store, you pick out some merchandise, and you pay for that merchandise with your credit card. That is a purchase transaction. The other type of transaction that you do, you might go up to an ATM or to a bank teller and give your credit card to the individual or the machine and get cash off of the card. And what you'll see is a transaction on your next monthly statement that's called a cash advance. Well, those types of transactions, cash advances, have fees on them. They can range anywhere from 2 to 5%. So let's say that you did a cash advance transaction off your credit card and you walked away with $500. And if the fee is a 5% fee, you will see a $25 fee on your next monthly statement for that cash advance transaction. That can be really expensive. Also, too, you need to look to see if the credit card has an annual fee. An annual fee is a fee that's assessed to you, assessed to your card, once a year. And it can run anywhere from $50 to $100. So look to see if you can find a card without annual fees. And lastly, you need to be aware of penalty fees, like late payment fees. At some credit card companies, they will charge you if you are late even one day making your payment. And these late payment fees can run anywhere from $20 to $35. So you need to look at all of the features of this credit card before you decide this is the card for you. As you're using your credit card wisely, you're probably building a positive credit history. Of course, if you don't use a credit card wisely, it can hurt your reputation. There are 3 credit bureaus in the United States: TransUnion, Experian, and Equifax. And these credit reporting agencies, also known as credit bureaus, collect information on your credit usage and your repayment history. Companies that give out loans like car loans or other credit cards or student loans or even mortgages will review the information in your credit history to determine if they want to lend to you. A little more on this subject in just a minute. So what's on your credit report? Well, the length of time that you've had credit established, the date the account was opened, will be on there. Also, your payment histories, like if you've made timely payments or if you made late payments, it'll be on there. Any accounts that you have not paid timely and have been sent to a collection agency, that'll be on your credit report. Also, the current amount of money that you owe others, that's your debt, that will be on your credit report. And the total amount available to you, the credit limits on your credit cards, will be on your credit report. And debt-related lawsuits will be on your credit report. So good and bad things will be tracked by the credit bureaus. It's important to use your credit wisely. When you get credit cards, don't go crazy. Remember, this is not free money. You should only use your credit card for what you can afford to repay in full when your statement arrives. And if you can't pay the entire amount off when your statement arrives, pay at least the minimum payment and more if you're able to. And of course, always pay it on time. Now, it's important that you know you don't need a lot of credit cards. 1 to 2 is all that you need. And because this is your reputation, you should never share your credit card with anyone. Protect it. Remember, you're building a positive credit history and a positive credit reputation. When you get your credit card statement, of course, you should review every single transaction that's on the statement. And if you see any strange transactions that don't belong to you, contact that credit card issuer immediately. As you're using credit, you are building a credit score. A credit score is a mathematical score that tells lenders and others just how trustworthy you are at repaying debts. And of course, the more trustworthy you are, the higher your credit score. Trustworthy is a positive characteristic. You're going to need a good credit score for a lot of things that you do in life. Like if you want to get a vehicle, you'll probably need a loan at a good interest rate. You need a good credit score and a good credit history for that. Even getting a cell phone, you need to have a good credit history and score for that. Getting a job, well, prospective employers want to hire someone who's responsible and trustworthy. And remember, a good credit history implies that you're trustworthy and responsible with your money. Qualifying for the lowest car insurance rates, you need a good credit history for that. And eventually, you're probably going to want to buy a house, and you'll probably need a loan for that. So in order to do that, you need to establish a good, responsible credit history. So we've talked about establishing credit and using credit cards wisely. We've only brushed the subject. So I encourage you to get more education on personal finance and credit. I encourage you, talk to your parents. Listen to other podcasts that we have on this website. Read through the educational articles and take our quizzes and attend as many free seminars as you can. You are going to make mistakes with your money and with your credit, but it's okay to make mistakes as long as you learn from them. Have fun with your money. It's for your security and for your enjoyment. Again, I want to point you out to our website because you can get a lot of tools for free about personal finance right off of our website. And one more good piece of information about learning about personal finance is Balance Financial Fitness. It's a free financial education and counseling service available to you. I want to encourage you to check out their website or give their counselors a call and ask them about establishing credit and what their viewpoints are. Do you have any questions? If you do, I encourage you to give us a call at the phone number on your screen or email us at serviceplus@ibmsecu.org. We'd be happy to answer any questions that you have. Well, we've come to the end of our webinar, and I hope that you've learned some tools for your financial independence. Don't forget to read the workbook that's entitled Smart Youth Finance Workbook. It'll remind you about what we've talked about here. If you haven't listened through Part 1, Part 2, or Part 3 of the Smart Youth Finance webinar, I encourage you to do that now. I have one final thought for you regarding the tools for financial fitness. The road to financial independence, it's not always a straight or easy one, but with your knowledge and with your enthusiasm, you will get there. This is one destination that's definitely worth the journey. Thank you.